Good morning, everybody. Jason Russell, Guild Mortgage Company. I wanted to record a little bit more of an in-weeds, in-depth level video today. I know I put out a little Facebook post yesterday in regards to just kind of the general analogy that I was using of people getting on a train and really where the markets have gone. But I felt like it might be worthwhile to kind of demonstrate just really, truly how volatile the markets really are. So on this chart, you're basically seeing what are known as mortgage-backed securities trading. And mortgage rates are closely tied to two things: mortgage-backed securities and the 10-year Treasury yield. Normally, when I do these kinds of videos, I'm showing you the 10-year Treasury yield because the direction of the chart matches the direction of rates. But where I think this week is important to share is just kind of how these mortgage-backed securities are trading and the true volatility of what we're seeing. So on this chart, you're basically seeing kind of a historical, day-to-day level move of where mortgage-backed securities are trading on a daily basis. So I'm going back to October of last year, and you can see how small these bars are on a day-to-day basis, right? So this kind of demonstrates the level of movement on a traditional day-to-day level of mortgage rates. Not a huge, these are relatively small, right? Compare that to this week. Look at, this is Monday, right? We were all the way up here, this line, huge move, huge move, even more yesterday, and then even so far today, really wild. So you're seeing when I have clients that are I talked to 2 days ago, and they're like, here's what you quoted me, and then they come back and say, yes, I'd like to move forward, and I'm like, oh, well, things are a little different, and by a little different I mean a lot different. And it's because you can see just yesterday, as long as this line was, that's like 2 weeks worth of volatility in a span of 7 hours. So it's just really crazy out there in terms of how volatile the markets are. And normally the 10-year Treasury yield and mortgage-backed securities, they work in conjunction with one another. So normally when you see the yields rising, mortgage-backed security prices are lower and vice versa. Well, this week it hasn't been that. The stock market has gone way down, which usually is good for interest rates. Not the case so far this week. And so I thought I would try and explain as best as I can why that is, because I've had a lot of people going, the stock market got worse, my rate must be better. Well, that's not the case this week. So the analogy I'll use is like, let's say you go to the market, right? And you've got somebody who is selling bananas, and they have 100 bananas that they have to sell today, right? So those 100 bananas must be sold. Well, what happens if all of a sudden they have 1,000 bananas that must be sold today? And if they must be sold and you have 10 times as many bananas as you usually do, what's going to happen to the price? You're going to have to sell them at a discount in order to get those bananas off your shelf. Well, think of bananas like people refinancing their loans, right? So the last 2 weeks, people were refinancing, and we as lenders had plenty of bananas or refis to sell, and we didn't have enough people to buy those bananas. And when you don't have someone to buy the bananas, you have to sell the bananas or loans at a lower price. A lower price means higher rates. So we needed to basically see these rates increase to make sure that we could sell our bananas or refinance our loans. So what I think is going to happen, and again, this is a prediction, and it's hard to predict because this coronavirus, this whole thing is just totally uncharted territory as far as the markets are concerned. What I think will happen is that within 30 to 45 days, when the banana selling market works itself out and everybody wants to buy bananas again, the prices can come back to normal and the markets can react in a way that is typical based on the technical indicators. But we're going to have to get through that process first. We're going to have to get through our backlog inventory of bananas at a lower price, therefore higher rate, for that to actually happen. So for those of you who missed out on a potential refinance, or if you're a loan officer and you're wondering what is going on with my rate sheet, what should I do with my clients? Keep this in mind that once we get through the glut of folks who, fortunately for them, got on the train and were able to lock in a refinance in the last couple of weeks, once those get processed and closed, people are going to want to buy bananas again. And when they do, the market indicators that we're so used to, that we focus on to help drive our business, is going to return back to a place of normalcy, I think. Again, who knows what's going to happen, but that is my expectation. So again, I know this is kind of a little bit more technical and nerdy, but for those on my friends list that are interested in technical and nerdy, I wanted to be able to share that. So hope you guys have a great day, a great weekend. Please, please, please stay safe. Wash your hands. You know, I don't need to repeat all the stuff we need to be doing, but you know, just be safe out there. Hope you guys have a great day. Thanks.